Yeah. Well, you know, there are a lot of major corporations and businesses that have used life insurance, to enrich themselves and also their family. And you and I, we talk about uh, generational wealth,
Mhm.
and life insurance has been one that was help these people generate the financial wealth for their
Yes.
families, and in the future. And so, absolutely, and they aren't the only ones.
Yeah.
Life insurance has been used to build hospital wings,
Yeah.
uh, contribute to universities,
Yes.
and a lot of things, charities.
Even
Because
even even in banking. I'm sorry to interrupt you. Even in
no,
banking.
go on.
Hmm.
Absolutely, absolutely. Infinite banking, that's something you want to talk about. Now, I have not so fun fact here. It is hot here in Richmond, Virginia. It's hot all over the country, absolutely.
Yeah.
But it is extremely uncomfortable where you're in a studio that's only 2.5 years old and your AC goes out.
Mm.
Okay. And I'm sitting in, let's see, it's 88 degrees inside here. But, I'm dedicated to make
Ooh.
sure that the show goes on. But
Yeah.
that's my not so fun fact out here. So, guys, stay cool. So,
Drink
now,
plenty of water.
look, I'm going, this is my fourth bottle today.
Oh,
Um, oh,
at least
oh,
you hydrated.
I have to. Yeah. But without further ado, I want to introduce a business partner of mine and a great friend, Mr. Oscar Toledo. I'm going to let him tell you more about himself. But I've been working with Oscar, I know, at least a decade,
Mm.
along with my great friend who's listening right now, Will Hidalgo. What a great, these are great guys, man. So we'll talk about that a little bit. Now, Oscar, I want you to introduce yourself. And if you can, and allowed to, tell us what you do, how you do it, and who is it that you employed with?
Absolutely. And Will, Aaron, you guys can hear me okay?
Oh,
Yes,
yes.
sir. Yes, sir.
Perfect. Well, first of all, I would like to start off by thanking both of you gentlemen for having me on this show. I greatly appreciate it. I had an opportunity to take a look at a couple past Money Talk episodes, and you guys are doing a fantastic job. A lot of great information that's being shared with a lot of folks that have the opportunity to check out your show. So kudos to you gentlemen for putting this together.
Thank you.
You're doing a big thing for the community, and I hope you understand that.
Hmm.
Yes.
Thank you.
So
Thank you.
for myself, Oscar Toledo, I've been in the insurance industry now for since 1997. Um, I've been primarily focusing on first starting off with property and casualty. 3 years after that, I got into the life insurance and retirement planning industry. And that's been an industry that has been very, very special to me because when I say property and casualty for all the listeners, um, look at it this way: car insurance. That's what I was doing right out of college. I was doing car insurance as much as I can. And I realized that it's very much a commodity sale. People are looking for the most affordable price they can get. And that's it. That's all they want. It's not about service. Give me cheap insurance because I have other bills that I got to pay, right?
Hmm.
But I really
Right.
didn't find a lot of pleasure in that business because I felt like I really could bring value to somebody's to enhance their life, to help them out with their portfolio, to help them out with their families. And that's when I got into life insurance and retirement planning. And gentlemen, I got to tell you, my life changed completely. I found a career that I can be very passionate about because, like you gentlemen were mentioning earlier, the several experiences of people generating wealth via life insurance. And it's up to us as consumers to understand the real benefit of how, not only what life insurance is, but what it actually could mean to somebody that has it during a family's most difficult time. That's the passing of a loved one. So when I started getting involved with life
Mm.
insurance, I got very excited, and I really took the time to understand the difference between all the different types of life insurance out there, because not all products are built the same. They're all slightly different, and it's a matter of finding the right one for the right client. So from term insurance to permanent, whole life, IUL, GUL, I've seen a lot of great products that are out there. Retirement planning,
Hmm.
gentlemen, that's where I also felt that I saw more gratification in that business quicker. The reason I'm saying that is because I had an opportunity to prepare both my parents' retirement. and they were fortunate enough, and they worked in factory jobs. They were fortunate enough to be able to retire at a much younger age because of a matter of taking a look at how they're currently, where their money's at, how can we readjust it to make that money work harder for them and to give them an income that they can never outlive. And at that point, now it's just a matter of having the opportunity to retire early, but now trying to find something else that can get them excited, something to get them out of that house. That's the toughest things that we're dealing with nowadays, right?
Right.
So, I've been doing retirement planning and life insurance really since 2002, very heavily. I'm currently working with Galagher. Gallagher is the fourth largest insurance company in the world. Now they offer all different types of insurance products. In my division, again, it's life insurance, annuities, and also linked benefits. Linked benefits, and it's very much like long-term care insurance. And I'm hoping maybe later on towards this interview, we can talk a little bit more about that, because I think that's also something very important that we should be discussing.
Yeah,
Let's do that, and let's make sure we do that. Go on, Aaron.
Well, right quick. Yeah, I definitely agree. That's something that actually comes up, and even I have a personal story of that. You were speaking with your parents, and you was able to help them. Unfortunately, I wasn't really able to help my parents as much as I wanted to, because I wasn't in the industry at the time. And they did okay in the later years. My dad has already transitioned, but my mom's still here. So I'm actually helping her to be in a better situation. And one thing that I did see, and of course you guys will see as well, is the knowledge. A lot of the people were just told certain things from jobs, and they that was it. And the one thing that I saw with when my dad was his final year and days of, okay, we got life insurance, we're okay. And and I was like, okay, where is it? Where is a policy? And it took so long to produce a policy. And then when you produce a policy, they have several, and then some had expired, and it's just different things. So in past generations, you see more so the knowledge just wasn't there, and it was just what was told to them, for our jobs and factory jobs. And my dad, he was retired post office, so same deal, blue collar. They were just told, okay, you're good, and they just believed it, and that was it.
No,
that's important. Yeah,
go ahead,
Oscar. I want you to. I really want you to expound on that, because something Aaron mentioned in his last conversation was in education. And when you sit down, and I've been doing this for a while, I was licensed back in 1998. I had a Series 7, 63, 65, 31 life and annuity licenses, and man, we're all over the place, but I decided that I wanted to focus on some areas, and I thought that I would be stronger if I focus on something. And I wanted to do something that will give my clients a foundation, something that wouldn't go away, something that would last for them, and something they can use later on in their years. Now, there are a lot of agents out here. That's why it's so important to get the right agent. How do you get the right agent? That is to ask the right questions. What are the right questions? Well, one would be, what will this do for me when 30, 20, 30, 40 years down the road? Oh, get some term insurance and invest the difference. Well, to me, that is not adequate advice. That's not adequate advice, especially if you're a young person. Now, let's get it right. You're right, Oscar. There are so many great questions out here, and term insurance has its place. It has its place. Okay, if you want to do a buy-sell agreement or something of that nature, with your partners within a business and things of that nature, that might work for you. But you have a young person that's in their 20s and 30s and their 40s, and you want to use that and tell them this is a good strategy for them when they can get an inexpensive, or it's not going to be as expensive to get a permanent policy that would last them a lifetime. And so that's why I decided I'm going to focus on permanent insurance. If my client needs a term policy for whatever reason, okay, then I would offer that only because they can't afford it, but I'm going to let them know what the downfall is. Mr. Jones, Mrs. Johnson, you know this is going to run out in 20 years, and the premiums are going to be through the roof. Aaron mentioned something to me that I read a long time ago. I want you to confirm this, or maybe you have some different information, Oscar. I read about 20 some years ago that less than 1% of every term policy ever resulted in a claim. Is that true, in your opinion and
It's
in your knowledge?
I have not looked at the statistics in quite a long time, but um, I'm more leaning towards Aaron being correct, because it's very rare when a life insurance, specifically a term policy, does pay out, because typically that goes to a younger individual that is maybe looking at a 10, 20, commonly a 30-year term. And the
Hmm.
issue there is that there is longevity for the most part. People are living a lot longer due to medical advances,
Right.
uh, people taking better care of themselves. And sometimes you have individuals that unfortunately lost sight of the important reason why they got the life insurance in the first place, and they
Hmm.
let their life insurance policy lapse. So
Right.
that's when those policies are not being paid out. That's why
Absolutely.
there's a huge advantage of looking at permanent insurance, because with permanent insurance, it's something where the individual, the insured, the owner of the life insurance contract, has something that they can really more grab and hold on to. Why
Hmm.
is that? Because within that life insurance policy, a permanent life insurance policy, you have a lot more flexibility, a lot more choices on what you can do with the policy. Specifically, and I think one of the things that most of my clients get pretty excited about is the cash value that you're building within these life insurance contracts.
Right.
That cash value, Aaron, can be used, as you know, can be used to pay down debt, can be used to, if you need a new roof on your car, excuse me, on your home, you can do that. You had some medical issues and you want to go in and cover a certain surgery that maybe your health insurance company doesn't cover, you can do that. Or better yet, maybe your life insurance has what's called living benefits that also provides additional financial support. Permanent insurance gives you a lot of opportunity, a lot more flexibility. Commonly, it's to eliminate debt. Commonly, I see to help pay for children's college education. Commonly, I see if you let the life insurance policy continue to build cash value over the years, people use that for retirement planning. They no longer need the death benefit. Now they just need additional income to live off of.
That's
Permanent
right.
insurance does that, not term insurance. It doesn't mean that term insurance is a bad thing. It's a matter of giving enough, asking the right questions, like both you gentlemen said, and determining what's the right combination, what's the right balance between term and permanent, to make sure that we're doing the
Hmm.
best possible thing for our clients. That's what we got to be
Hmm.
looking at. And that's where our
Right.
responsibility comes into play. And for all your listeners, maybe you have talked to somebody in the past about life insurance and you felt, you know what, it didn't make sense. Why should I do it? Maybe you bought a bad policy. Commonly, we hear people buying variable life insurance. That burned a lot of people over the
Hmm.
years.
Mhm.
Um, the illustration was ran inappropriately on a permanent life insurance policy, and the insured felt like they got deceived, so they lapsed the
Right.
policy.
Mhm.
Having one or two bad experiences does not mean that, one, all agents are bad. They're not. Two, that life insurance altogether is a bad thing. It's not. Aaron, you mentioned during your opening comments about, again, wealth transfer, about life insurance. Out of all people, one of the wealthiest families in history with the Rockefellers, right?
Right, right.
Life insurance can be a huge game changer for any family, especially for the next generation if used appropriately.
Mhm.
And when they
Hmm.
work with individuals like ourselves, I feel like, for those of you that are listening, you have a great opportunity here to work with some great individuals, because what we like to do is we like to take our clients through a process where anything they share with us is confidential. We um, we value what the concerns are. We listen to what their objections are, what their fears are, and we respect whatever decision they make at the end of it. If they decide that they don't want to move forward, that's perfectly okay.
Mhm.
But when you're dealing with a good team that does like to listen to their clients, and does respect
Hmm.
your privacy. And we're not here to judge, but at times, unfortunately, gentlemen, we do have to be a little stern because sometimes people need to understand your perception of a life insurance policy is not correct anymore. Your
Mhm.
perception of what an annuity is, it's not correct anymore. It's changed. And allow me the opportunity to give you some education so you have more information to make an updated decision on what your thoughts are about these type of products. And if they make sense for you, we move forward. And if they don't, that's perfectly okay as well.
Mhm.
It's a difference there, Oscar and Aaron. And someone, if I walk into your home and I want to say, you say, hey, well, I understand that you have some information about insurance, or you schedule this appointment with me, and I want to talk to you about some insurance, and you allow me to come in. So the difference between uh, all agents aren't created equal. Let's put it like this. Some are, you mentioned something about when you switch from car insurance to moving over, and that you had a PC license, but over to life and annuity and stuff like that. It was far more gratifying because you were able to do something. And I agree with you 1,000,000%. There are so many clients out here that were happy that I showed up, and I had to change their perception about what they knew. Uh, uh, for instance, there's a man, life insurance, it never pays off. Okay, all right. Then that tells me right there, they were being offered the wrong type of insurance. Oh,
Right.
well, I
Right.
annuities are all bad. Okay, no, they're bad. I don't want an annuity. Until I stopped, going back a few decades, I said, wait a minute, hold it. I started asking the question, why do you say annuities are all bad? And they told me what their perception was. And I said, well, do you mind if I share some facts with you? Okay, because what you have been offered is not what I'm talking about. And that changed my business, and also it changed their lives. And I can't tell you how many people say, wow. And I have my clients that I've had 10, 15, 20 years ago, I still have them because they know that they can talk to me anytime. If they have questions about anything, they even call and ask me, William, I'm thinking about buying a house. What do you think? I'm thinking of buying this. What do you think? Okay. There was a trust factor built there. And I just don't, my thing was, I'm going to stay there until my clients' questions are all answered. And I want to make sure before I leave that they get the right perspective on certain things. And I remember early on in my career, when I didn't have all the answers, I would make a phone call back to my office with a more seasoned expert,
Mhm.
and I'll put that expert on the phone with that client. And I said, well, Joe, I want you to confirm what I'm sharing with the audience. I mean, with my clients right here. This is what I shared. Would you let them know who you are? What are your credentials? And would you talk to them? Oh, sure. So we have to make sure that we don't run in and say, look here, I'm here. I've got about 15, 20 minutes right here. Let's write this policy. Well, believe it or not, there are agents that do that. They're transactional
Mhm.
instead of
Yeah.
being an agent that really wants to know their client, wants to know what the client's needs are. And one important question is to ask that client, what is it that you're looking for? There are
Mhm.
so many products, like you said out here, Oscar. There are so many products out here. And there's not one thing that, with these different products, it's not one size fit all. We all have different needs for different purposes, right? So we want to talk about that and the importance of disseminating good information, sound information, and even backing it up. You want to elaborate on that, Oscar?
Sure. And Will, when you're asking that question, it's you're asking about our process on how are we talking about more of the fact finder process or
Fact
and how we
finders
provide information?
and listening. Yes.
Okay. Well, the fact finder process, which is also commonly known as the discovery phase, it's a very
Hmm.
important one because at that point you have an opportunity, maybe for this first time, maybe for the second time, for the two parties to get to know each other and determine if they like each other.
Hmm.
Because
Hmm.
obviously, consumers, clients, they have to decide if they feel comfortable enough with the agent that they're meeting with to be
Hmm.
willing to share some personal information about themselves so they can really do a good job on reworking their portfolio. But also in my practice, I also have to be very selective on who I work with, because I want to make sure that those individuals that I work with, that one, they are good listeners, two, that they are coachable to a certain extent, because I'm going to be giving them some advice. Doesn't mean that they have to do what I ask them to do, but to understand what I'm saying, and for to make sure that I know that they're also making some good decisions, right? Because it's not just
Mhm.
up to me what they do with their portfolio. It's always up to them. I'm here to give them information, but I want to know that they are coachable. During the discovery phase, I mentioned a little bit about me respecting whatever decision that my clients make. I start every
Mhm.
meeting by saying, Aaron, what I would like to do is walk you through the process that I take all my clients through. It's my policy to be open, honest, and transparent with everything that I share, and anything that you share with me will remain confidential. And lastly, I will respect whatever decision that you make at the end of our appointment.
Mhm.
Right.
With that being
Mhm.
said, are there any immediate questions that you have? And if you don't, the next few minutes is for me to get to know you personally. Let me know a little bit about where you grew up. Talk to me about your family. What was that situation like? Talk to me about
Mhm.
the best memory that you have that has to do with money. I want to know financially where your financial
Mm.
IQ is at. Now, let me ask you, what's the worst memory that you have about money? I want to know what
Mm.
those triggers are. I want to know what can get you upset. I want to know that, unfortunately, because a parent lost a job, you had to move from one place to another. I want to hear because a parent or a grandparent got very ill and there was no long-term care insurance, that one of the parents either needed to quit their job, or a child needed to now be the caretaker for a grandparent because there was no money.
Mhm.
I want to hear those
Mhm.
experiences, because at that point, I'm hearing triggers. What's something that meant something to you that you want to make sure that the cycle does not continue? Once I get to know you a little bit better, I feel at that point we'll have an opportunity to determine if we want to continue to work together. And if we do, great. Now, what I would like to do is go through the transactional part of the appointment. I'm going to ask you some questions. I want to know where your money is currently at. I want to know your financial situation. I want to know what's the main reason that you wanted to meet with me today. And what would you like to see? What would you like to get out of this initial appointment and our last appointment
Mhm.
to feel like this was time well spent? Once I have that
Mm.
information answered, Aaron, at that point, we can really get into the transactional part of the appointment, and again, getting all those questions answered. Once we do that, I got to tell you, it takes my team and I a couple days for us to come up with a good solution for our clients.
Mhm.
The reason is because we want to take a look at all angles. We want to make sure that we do our research, our due diligence, to take a look at all the possible options and find the most effective way to solve their issues, their financial concerns. Not the easiest way, the most effective way that long term would put them in a much better position. Long term
Mhm.
would put their children in a better position. Long term, their grandchildren will be put in a better position. And if at that point we're able to clearly illustrate that to our clients, here's what we're looking to do: generational wealth. And here's a smart way to do it. And we do it without putting any financial stress on you. If that is something that
Mhm.
would be meaningful to you, but not stressful, I believe we should be looking at those options. That's the conversation that I
Mhm.
have, Will, with a lot of the clients, especially the clients that you and I've worked on in the past. We look for that information from them. We look for that check-in with us to show us that they do want to work with us. And to a certain extent, we need to make sure that our clients are comfortable enough with us to let their guard down a little bit, because here's what I found. Sometimes folks are embarrassed because they did not do a good enough job saving enough money. Sometimes my clients are embarrassed because they made a bad investment and they lost a lot of money. Sometimes my clients embarrassed that I'm asking them questions about their finance that their spouse, who's sitting right next to them, was not aware of. And if that information is not shared, my team and I, we can't do our best to make sure that we're making the right diagnosis for my clients. It's like going to the doctor, and because with the doctor could be well experienced, I don't do an MRI, I don't do any tests on you, but all of a sudden I'm going to go ahead and say you need brain surgery, you need this, you need that. No, you're not going to do that. Nobody in their right mind will do that. Doesn't matter how much you like the doctor. The process is you need to go through your due diligence, run all the appropriate tests, and make sure that you really understand what the major concerns are, and for us to be honest enough with ourselves that we do have the solutions to help put our clients in a better position. And if we don't, we have to be honest with ourselves first, then honest with our clients that on these concerns, we
Hmm.
cannot help you. But I may have somebody else that I can refer you to. When you do
Hmm.
enough right by the client, I feel that karma is going to be there, and it's going to
Hmm.
pay off for us in the long term.
You're exactly right. And what I heard a couple of things in your dialogue there, and that is number one, you putting the client at ease.
Mhm.
You're making them feel comfortable. And also, if I were to hear that, if I weren't in the industry, and I had an agent like you come over, I said, "Wow!" After you leave the home, and you said a couple other things.
Mhm.
You don't when you come into their home, and this is some bad advice that I was given early on in my career, and I decided this wasn't right. And my manager says, when you walk in that house, open up your briefcase and pull out the application, put it on the table. Wow.
Mm.
Mm.
If someone did that to me, that would
Mm.
put me, I would be at ease. I would not be comfortable with that because that's telling me you really aren't here to hear what my needs are. You're here
Mhm.
to make a sale, and I think that's a disservice that a lot of agents will they do. So it's very, very. That's what you're saying. I mean, that is agent etiquette. Etiquette 101. I
Absolutely.
really appreciate you
Mhm.
spelling that out, Aaron. Aaron, jump on in.
Right.
Whatever
Yeah.
you have to
Yeah.
say.
I was about to kind of say the same thing. Ditto with that, and that's what I saw. That's what I heard with what you're saying, Oscar. And you have the client, the potential client, in control. They're in control, so they didn't feel pressure. They didn't feel pressure at all, and where everything. And so I guess you could say the ball was in their court. And I can't even tell you a personal experience. I guess the first experience I had with an insurance agent as an adult many years ago. The guy came on my house, and okay, blah blah blah. And it was a company that actually me and William talk about a lot, but we're not gonna say that that company. But anyway,
Right.
long story short, the guy kept on called me the next day. Called me the next day. And it was like there's so much pressure on getting this. And so it was a total difference from what you're saying. And again, well, that shows that you're just trying to get a sale.
Right.
And
Mhm.
even going back, remembering it was some years ago. I don't remember anything of asking, any of those questions, any personal questions. It was just boom, boom, bam. That's it. Okay, this is how much it costs. I'm throwing it on there. One size fits all, and that's it. You know, this amount of money you're gonna pay, $100,000 policy. Bam, that's it. And then you kept on calling me. So getting in the industry, I kind of like learned from that of being on the other side when people did that to me. And so that's why I learned just like what you just did and how you approach, the potential client. And that's what
Mhm.
and then that's when we can get away from the stigma of that insurance
Absolutely.
quote insurance agent.
I,
Right.
I, I
I tell
absolutely
you
agree with both
something.
you gentlemen.
Go on. Let me share this with you, guys,
Hmm.
because what happens is, you know, a bad agent, a bad lawyer, a bad doctor, all of these people put stigmas on those industries.
Hmm.
And you've got a lot of great lawyers, doctors, agents technicians, whatever it is out here. But once people experience have a bad experience, bad news spreads faster than good news.
Mm.
Bad news really
It
spreads
does.
like wildfire, like those wildfires you guys have out there in Southern California. It spreads. I remember working for
Bad,
this company. I'm
bad
not
news
giving
and
them.
gossip spread quickly.
That's exactly right. Both are bad. And so this agent, I remember a couple of decades ago, I worked for this company, and had just started with this company. I had left the brokerage firm, and I went to and worked for a life insurance company. It was a reputable company, one of the largest in the world. But anyway, I remember sitting there, and my thing was stocks, bonds, mutual funds. That was my thing. I wasn't big on life insurance because I think that I really didn't understand, and they didn't teach that. Uh, Understand how important life insurance is, and used properly, it can be a foundation along with annuities to. And Aaron and our tag is we build sound portfolios. I mean portfolios using sound financial practices and principles. Okay. And when I think about that, I think about life insurance. I think about annuities, and especially on the permanent end with insurance. Okay. These can be the foundation to your future, as we said. And I recall coming in, and I'm kind of struggling a little bit, just brand new, just struggling. And this guy used to come in, he came in, and off the bat, he was a hot shot. Had never been in the industry before. I had been in the industry long before he was, right? And just a hot shot. He come, oh, I got another one. I've got another one. I've got another one. And he came over to my desk and he said, oh, guess what? How I got this one? He said, when the husband got up from the table, I leaned over to the wife. I said, you guys really need this because he's going to die one day. And what you going to do?
Mm.
He ended up getting the sale. I thought and I looked at him. I said, that's absolutely awful.
Mm.
That is absolutely awful.
Mm.
Why would you do something like that? Well, I got the sale. Yeah. Well, he didn't last in the industry long either. Matter of fact, he's not in the industry, and he shouldn't be.
Right.
Those type of people we do not need in our industry.
Mm.
And you got a lot of agents there out here. And folks, please, if you have an agent that's coming in and he pulls his application out before he even introduces himself, or barely introduces himself, put an application on the table, you can say, thank you for coming by, but we kind of changed our mind. We don't need your services. But you have some agents, and they've
Right.
done this in the past. I'm not sure how much this goes on right now. I'm sure some of it still goes on, maybe more than I'm aware of right now, that they bully and they use fear tactics
Mm-hmm.
to,
Mm-hmm.
for their clients. Oscar, I want you to address that and how bad that really is.
Unfortunately, Will, it is something that's very common out there. Um, the insurance business, no different than, like you mentioned, with real estate brokers, stock brokers. Um, there's a lot of bad apples in all different types of industries. It's out there, and it's
Right.
unfortunate because it does put a bad name um, to the industry to a certain extent, especially because life insurance and even our annuities are not required for you to have. They're not, going back to where I started in the industry with auto insurance. I'm here in California. Car insurance is required to have. You have to have it, or you get cited for it,
Right.
right? But
Of
life
course.
insurance, you don't have to have it. Annuities, you don't have to have it. You can rely on other things. It's not going to put you in the best of positions if you don't have it, because I'll tell you, gentlemen, and it's in its most simplicity for our listeners to really grasp what life insurance really means to somebody, to a family. What life insurance
Mm-hmm.
means, staying in their home. It means still being able to buy clothes, still be able to pay off the car payment. It means having the opportunity to financially pay for college. It means putting groceries on the table. Because here's what it is. When that income earner, let's call it a parent, a spouse, is unfortunately no longer
Mm-hmm.
with us, We are no longer getting their income that's coming in to help pay the rent, to help pay the mortgage. What's going to happen to that family when they have to leave their home? What's going to happen
Wow.
to the children's education when they can no longer afford to pay for college? Maybe they can try for financial aid and try our luck.
Yeah.
Life insurance takes that stress away from the situation to make sure that that family can still financially move forward. And that's what it's there for, and its simplicity. I got to tell you, it breaks my heart when I do hear that a friend, a colleague, or on social media you see that somebody passed away. Yeah, it's life.
That's
Time will
it.
remain undefeated. Life will continue. Things would move on, but we're not promised to be here for infinity. We will pass at some point. What breaks my heart even more, and I get it, some people don't have an option. They don't. And it breaks my heart when I see a GoFundMe, when I see where I live, where I grew up, especially a car wash to help pay for funeral expenses,
Mm-hmm.
not knowing that that individual could have had the option to buy life insurance through their employer, pennies on the dollar. There is insurance that some employers offer. Is it the
Mm-hmm.
best type of insurance? Not necessarily, but it's something. It's better than nothing.
Right.
Or if they
Right.
had an opportunity to really take it serious and get educated to either rely on individuals like ourselves where it's a complimentary meeting. We're not here to force you to make a decision. We will give you some information and allow you the opportunity to make up your mind. And if you don't move forward, believe me, we're not going to be mad at you. That's your decision for you to make for you and your family, for you and your business partner. If you have a business together, life insurance for those business partners is also important.
Mm-hmm.
Whatever it is, we want people to know that, yes, the decision is up to them. But what I can tell you, especially for culturally, for me being Latino, we look for that generational wealth. My parents are immigrants.
Yeah.
They came here to the US with nothing. And with hard work, we were able to, they worked multiple jobs. My siblings and I worked multiple jobs in order to try and make it, right? And we know it's not easy for everybody. We know it's
Mm-hmm.
hard. What we're giving people the opportunity to understand is that we as a culture can do what other people are doing, smart money, by leveraging other people's money, insurance companies' monies, to help our families move ahead. Aaron,
Mm-hmm.
I can't tell you how many times I've talked to a family where they have an elderly parent who's very coherent, but I asked the adult children to pay for their for the parents' life insurance policy. Because yes, you can do it. There's a way to
Mm-hmm.
do it. Because guess who's the beneficiary? And you're asking
You.
yourself, well, that doesn't sound right. What would you rather happen? Like I said,
Mm-hmm.
time is undefeated. We're still going to die someday.
Mm-hmm. That's exactly
And
right.
there's a lot there's a lot of ways, when I think about this, um, there's a lot of ways on what type of legacy I want to leave behind. I already know what kind of legacy I want to leave behind. I already know how I want people to remember me. I want people to
Mm-hmm.
remember me as a good son to my parents, as a good husband to my wife, as a good father to my daughters. I want to be remembered to all my clients as somebody that really took the time to listen to them, to not force them into doing things that were not right for them. I'm not out here looking for a commission. I'm out here to help as many people as I can, whether they become a client or not, but give them good information. I want people to say that
Mm-hmm.
I meant something to them. I put them in a better position. And because of the life insurance policy, when the husband, my client, passes away and his spouse can stay in their home, that means something.
Sure
Yeah.
does.
That's what I want people to understand about
No
life
question.
insurance.
Yeah, absolutely. Aaron, we're going to spend a few more minutes on life insurance, but then we have to get to annuities. I can't believe how quickly this time is flying by.
Yeah, it flies by.
But
It flies
also,
by.
Yep, yeah. My sister Emma Brown, she's listening. And hey, Emma, thank you so much. She said life insurance plays a huge
Emma.
part on the family when you die. Without life insurance, the family have to pay for their burial, and we have that happens more often than not. So, Aaron, jump right on in, my brother,
Right,
friend.
right, yeah. It was something. It was something. When you mentioned GoFundMe, and it's something I saw online the other day. They were saying something to the effect, paraphrase, something to the effect of, would you rather pay for, would you rather pay a monthly premium, or either trying to raise tens of thousands of dollars in 16 days? So it was like, wow. And that was something. And they was talking about a GoFundMe, trying to raise tens of thousands of
Mhm,
dollars for a funeral in probably about 2 weeks or 1 week or whatever to bury somebody. So of course it's definitely cheaper to pay a monthly premium than actually trying to raise 16, 20 grand or whatever, trying to bury a loved one in a matter of a week or two. That's rough.
No,
That's
absolutely.
rough.
We are talking pennies on
You
the
know, you
dollar, and there's very affordable life insurance out there, especially for those clients that may be listening right now. If they're over the age 50, 55, 60, and they're just looking to make sure that they have some insurance that can cover those funeral expenses, there is what's called final expense, and they can get a policy for 10,
mhm,
15, $25,000 that can be very affordable. In some cases, gentlemen, as you
mhm.
know, they don't even have to do a physical, a paramedical. They
That's
can
right.
qualify for it. There are options out there where if an individual is afraid of needles, because some policies will have to draw blood, but if
Mhm.
that's a concern, there are other options where that's not a requirement. We have options to
Absolutely.
take a look at.
That's
But
right.
I know, Will, you said
It's
you
called
also wanted to touch
non-hit.
base a little bit on annuities. Is that still something we would like to
I
discuss?
certainly do. Yeah, absolutely.
You know,
Can you just debunk some of the misnomers about annuities? And understand all annuities aren't made equal, but I've had people, like I said earlier, I think I mentioned earlier in this conversation that I talked to, if earlier in my career, people, oh no, 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 I don't want annuity. I don't want annuity. They're all bad. They're all bad. And finally, I had to sit down with them and I said, let me ask you a question. What have you heard about annuities? And the information that I was getting now, older, I mean, we talking about going back decades, annuities. There were some of them weren't designed correctly at all. They weren't designed properly, and so I would listen to them. And Oscar, I noticed there's something in your whole conversation. You listen to your clients. They're so important. You aren't the one that dominate the conversation by saying you should do this. This is that. This is the other. How much do you want? I mean, and so number one, you're not garnering any trust that way. You're not listening to the client. You don't know what their needs are. And until I started asking those questions, what is it about annuities you think are bad? I want you to debunk some things that people are saying because I'm sure you've run into that before.
I have. Now, Will, do you have some examples of what are some of the objections that you come across when annuities
Yes.
come up, or would you like me just to throw some out?
No, let me just throw one out that I'm not aware of, but they were telling me. Well, what I understand is uh, that when if I die, then the annuity company keeps the money. That's one thing that I've heard before. I don't know whether this was in the design of older annuities going back 30, 40, 50 years ago. I have no idea. Or annuities don't pay out, or you lose some of your money with annuities. Now, some you can, it depends on whether it's variable or not, and depends on your allocations there. So you can take it from there. I'm sure there's some things that you've heard that I haven't,
No,
but I want
absolutely,
you to
Will.
debunk,
Um,
please.
yeah, no, absolutely. Starting off with the first one that you mentioned in regards to um, losing their money at some point. Well, it really depends on the type of annuity that they had, because there are a lot of different types of annuities out there. You mentioned variable. Variable, it's a securities product that does have a lot of high risk. For myself personally, in our practice, we deal primarily with the fixed products that are not directly tied into the stock market. So, for one, if it's a variable annuity, we don't do those. I don't do those.
I don't do those
Is there a
either.
way for a company to keep all their money when the person passes away, there's one way, but it rarely happens. And it comes down to getting bad advice from their agent. This is something that we would never
Mm.
do for our clients. The way that I see that could potentially happen, it's what's called a SPIA, a single premium income annuity. The way those are structured, you pretty much put in a deposit, and then at that point, 30 days later, the insurance company gives you a paycheck for as long as you request it on the SPIA. You can do, I want a SPIA for the rest of an income for the rest of my life. I want a SPIA for the next 5
Ah,
years, 10 years. I want an income for the rest of my life with a 10-year guarantee. So that we don't go too much into the weeds, I'll tell you the one way that you can lose your money, the moment that you request a life-only payout. So I have $100,000
yes.
that I put in. I'm going to receive an income for the rest of my life. There's no period certain that's tied into that contract. You pass away in year 2, yes, the insurance company will keep the money. There are going to be
Wow.
documents that insurance companies are using to protect themselves to make sure, Mr. and Mrs. Johnson, do you understand what you're requesting here? This payout option will give you the most income out of all the options, but your risk is this. I in my career, I've never seen a client, for the exception, and I'll tell you the exception here in a little bit, but I've never seen a client do a life only payout. I don't allow it. Where I would allow it is when the rates were very attractive in these SPIAs, we would take an amount from my client, put it into a SPIA for the rest of their life. You're thinking, Oscar, but he's going to lose the money. No, because we're using those payments to fund a life insurance policy. And in that life insurance policy, remember, the SPIA is paying it for the rest of the life, so it's paying the premiums for the rest of the life. Set it and forget it. And when that person passes away, out goes $1 million death benefit that's income tax free. That will go
Mm-hmm.
immediately to the spouse, to the children, to a charity like a church. Whatever you decide, that's where that money is going to go in tax free. But if you're not doing it that way
Mm-hmm.
because you're just going in there blindly or you have a bad agent, they're going to tell you to do the life only payout and then the insurance company can keep the money. But again, unless you're not paying attention, I don't see people nowadays falling into that trap. And that's the way I would answer that to my clients, because I want to educate them. I'm educating them on what options are out there, but then also showing them this is the only way that I see that could happen. But that's not going to happen with
Mm-hmm.
me.
Mm-hmm.
That's a common objection.
Right. You know,
And another objection is,
so what I hear, yeah, what I hear, the trap there is, and this is the trap. The life only gives you the highest payout. And so that is the hook that a lot of people fall, or the trap they fall into. Well, shucks, I can get $1,000 a month if I go this option, but I only get 750 if I go another option, and even 500 with the other. So they will take the most money and not realizing that, hey, at the end of this, if I only live 2 years, I've got $100,000 in there. Okay, and they've only paid out, let's say, $24,000.
Mm-hmm.
Then what happens to that other $76,000? The insurance company keeps it. I want you to talk about that versus a GLI, guaranteed lifetime income annuity.
so with a guaranteed income life annuity, those work a little bit differently. Those are typically tied into a fixed annuity or fixed index annuity, which I really like.
Mm-hmm.
With those, here's what I like. It gives you an opportunity to grow your money at a fantastic rate on a guaranteed basis for anywhere between, for the next 5 years, 7 years, 10 years, or 20 years. So I can come to you, gentlemen, and say, you have this amount of money that you're earmarking for retirement. You want to retire in 6 years. During that time, you're thinking about either collecting Social Security, maybe starting your pension or your 401k. But you
Mm-hmm.
also know that you need to leverage as much income out of these other funds that they're willing to work with me with. So what I do is I put that money into a product, an index annuity, as an example, that may give them a nice bonus. That bonus can be anywhere between 3%, 5%, Aaron, there's contracts out there that are giving out 35% bonuses.
Ooh.
Whoa.
That bonus will go into the income value. And then on top of that, gentlemen, the client can also get a 5%, 6%, 7%, 8% compounded rate that's credited to their income account every year for the next X amount of years. It depends on which one you're looking, which annuity we're presenting, right? And then when the client's ready to retire and start taking an income stream from this contract, because again, we're using that guaranteed income rider, then at that point,
Mm-hmm.
we can then turn on the income rider, and the insurance company will use this larger income value that received the 35% bonus, 7% rate compounded every year. The account grew like this. And client might think, whoa, that's a lot of money. Let me take that money and run. No, that's an income value. And I always want to make sure that my clients understand income value, accumulation value.
Right.
At no point will I have any of my clients sign a contract with me unless they can clearly explain to me the simplest thing of the contract. How does the accumulation value work? How does the income value work? How does the surrender charge work? Mr. and Mrs. Client, if you can tell me the basics of this contract, I feel comfortable with us moving forward. I'm doing that because I'm getting them to acknowledge that they do understand what I'm offering them and that I did do a good job. But also, Will and Aaron, I thrive on getting referrals. If my client can at least remember those little things about the annuity and go to their neighbor, go to their friend, go to their siblings and say, hey, do you know what, that Oscar guy, he put me in a good contract. And typically, if I don't do a good enough job and make sure they understand it, but I made them feel good, because statistics show people remember 6% of what you told them, but they remember 100% of how you made them feel.
Yep.
So if I made them feel comfortable, they may want to refer me business. But Aaron, if I can also make sure that they can clearly explain to their friend, to their family member, he gave me a contract that gave me a 35% bonus, 7% compounded. I was going to get guaranteed income for the rest of my life. And get this, if I was to become sick, that income that I'm receiving from my contract will double for up to 5 years when I mostly need it.
I like
and
that.
then at the end of that 5th year, my income will go back to its original income amount for the rest of my life. Is that something that you feel could be meaningful in your portfolio? If you know, as life happens, things come up. We get health scares. And at that moment, you start really thinking about life, thinking about, did you really do it right? But also, how are my finances? Am I going to leave my family in a better position? Do I have enough money to get through this because I cannot go to work anymore, because I physically cannot work anymore? Am I going to get booted from my apartment, from my house? All these things come into play when it's too late. Because people are not taking the time, the initiative to look at these options now. And they rely on their family. And unfortunately, for some people, family's there and we try and be there for each other. But sometimes that other family also does not have the means to take care of us.
Right. Yeah.
Let me just share something with you, Aaron. Hey, guys, we out of time. Oscar,
Oh man.
would you please promise us you're going to come back? Because there's so much more that we need to
It's
explore.
so much more. So much more.
Man, we
Especially
really
I would love to
enjoyed
come, and
this.
if you'll have me, I would love to come back.
Thank you.
Oh,
Thank you.
yeah, we'll have you. That's no question about that. Okay. If it's okay with my friend Aaron.
Oh yes. Well, yeah. We got to get more into the annuities.
Yeah,
No,
absolutely.
absolutely.
Man, oh man, oh man. Oscar asked me, he said, well, how long would it be? I said 55 minutes, and we've already gone 56. So, and then I have another show coming up. So, Oscar, will you please come back real soon? And also, Aaron and I, we're going to call you back when we have some other clients that will fit into this arena, because we would really like to have a third voice. And Oscar, he's one thing about Oscar, Aaron, he also reaches out to his agents, right? And he said, what can I help you with? What can I do to help you? Oh, man, Oscar,
Awesome.
It's been great, my friend.
Yes.
Thank you.
Yeah. Yeah. I've
Thank you,
been I've been
gentlemen.
Appreciate
writing
it.
I've been writing notes. You're actually the first guest I actually been writing notes. What you do. So I'm a fan.
Well,
I'm a
Aaron,
fan.
that's a nice compliment that I'll accept that compliment. It's I appreciate you
Mhm.
saying that. Thank you.
Definitely, definitely.
Oh wow, and my good friend Valor Brand, she's tuned in as well. Hey Valor, how are you? Hey, look, Valor and Emma, everybody else, please tell the your fans. She's a recording artist. Tell your fans and your friends and other artists. Hey, look, check us out each and every Tuesday at 2:45 on the West Coast. That's right. We broadcast around the world. 2:45 on the West Coast, 5:45 on the East for Money Talk Live with William and Aaron. So, guys, can't thank you enough. I knew it was going to be great. I knew it was
Yeah,
going to be great. I didn't know it
yeah,
was going to be this great.
yeah.
Thank you, Oscar. All right, my
Thank
friend.
you.
Guys, gals, enjoy your evening. I hope you guys enjoyed this. We play a lot of music on this